I got a signal to go short, so I'm going to place my stop. I'm going to place my take profit. And from here, I will manage the trade. Now, as the trade progresses, I'm going to reduce the risk as frequently as I can. So I got the signal to go short, stop is placed, take profit is placed, and it's just a matter of managing the trade. So we're going to manage the trade as it works itself out. And I'll put the video on pause and I'll be back shortly. This trade is moving in our favor, so I'm going to manage this with the stop. Now I'm going to move my stop a little bit. I'm not going to kill, or I'm not going to reduce the risk a lot, but this is just the initial phases of the trade. So I am going to reduce it about a fifth or so, and that is going to make the risk smaller than how I started out. I'm going to manage the stop a little bit further on this trade. So we've reduced this quite a bit now. So we're sitting at probably more than half of what the initial risk was, simply because of proper trade management. A little bit of chop in here, but that's to be expected. We've just opened Europe, so the European market is just opened, so we are seeing a little bit of noise from that, but that's okay. We're still in the trade. No reason to close it early. We are looking good. The market is on its way down to our take profit, and I hope to catch that version on the video. A little bit of sideways chop, but that's okay. Market has come back around, and I do get an opportunity to manage my trade a little bit more. So the risk on this one is very, very small. You can see how small the risk is versus how big the gain can be on this. So we've got small risk, large potential reward, and we're just about there. The market has to drop below this level by the spread amount. And that's why this didn't take us out. We have to get below by 1 point, whatever it was at the time, 1.8 pips, I think. So once the market drops below this exit line, or take profit by 1.8 pips, then we will be out of the trade. This might take us out here. We might see a little push to the downside. And if that is the case, then we'll be out. Now this is an equilibrium short. And the signal was inside of this channel here. We had the short signal here, and the market has fallen through. And we are very closely going to be taken out of the trade in, looks like, full profit. So again, I'm going to put the video back on pause. Once we get a bit closer to our exit, then I'll come back. One more opportunity to manage the trade. So now we're not quite at break even, but almost there. And hopefully within seconds, we're going to see an exit here as the market hits our take profit. I do get a chance to move to break even. So let's do that. Stop loss. I'm going to move just on the underside of the entry. So I am not only at break even. If I lose, I'm going to get a little bit out of this. Now we are dropping below the exit level here. It has to get by whatever the spread was, 1.8 pips. So we're going to see that right now. There we go. This was an equilibrium short. Now we have touched this middle channel, and I do expect that the price is going to react off of that level. We can see over and over and over again in history how the market reacts off of that level, and it makes for a really nice profit target. So we managed to get this trade taken out. This was an equilibrium short. I want to take a look really quick and see what we made on this one. So here it is. This is the short trade, $885, nice and clean. So this was the entry, was this candle here. This is what we call an equilibrium short. The setup was crystal clear, a very nice shorting opportunity, and the target was this middle channel here. So we had the target at the channel. The channel did drop a little bit as the trade progressed, and that's perfectly fine. So we were taking out. The profit target wasn't quite 2 to 1, but it was much more than 1 to 1. So we had a really good trade out of this. Again, this is an equilibrium short trade, and it worked out really, really well. See you in the next live trade video.